All right. Hey, everyone. Welcome back. We're diving into some pretty interesting stuff today.
Yeah, definitely interesting, maybe a little concerning too.
I think that's a good way to put it. Today, we're looking at Bitcoin spot ETFs.
Right, specifically all these flows of money going in and out.
Exactly. And we've got some really detailed analysis we're going to be digging into today, trying to figure out what does this all mean for Bitcoin? What's the bigger picture here? And why should you even care?
Yeah, it's a good question. I mean, there's a lot of noise out there, so we're going to cut through all that.
Right. And I think the core question we're really grappling with is, are we just seeing some temporary profit taking here?
Yeah, just people locking in some gains.
Or is this a sign that some of these big investors, these institutional players, are maybe starting to lose faith in Bitcoin?
Yeah, are we seeing a real shift in confidence? It's a big question.
Yeah, it is. And to get to the bottom of this, we're going to look at why these outflows from these ETFs are so persistent.
Right, they just keep going.
We're going to talk about what's happening with GBTC.
You know, Grayscale's Bitcoin Trust, still a major player.
Absolutely. And then we'll try to decode what this ETF net asset ratio is really telling us. Because on the surface, it looks kind of stable,
Yeah, deceptively stable.
that we're going to figure out what's lurking beneath the surface.
Right, let's get into it.
Okay, so first things first, we've got to acknowledge the elephant in the room, right?
Yeah, this trend that's been hard to ignore.
6 days in a row.
More money flowing out of Bitcoin spot ETFs than in.
And it's not small amounts either.
No, not at all. Just yesterday, we saw $369.42 million walk out the door.
$369.42 million gone.
Yeah, and to make that even more striking, over the 4 days before that, we had a total of $739 million flow out.
That's like, okay, maybe one day's a fluke, but 6 days.
Yeah, that's starting to paint a picture.
It's definitely a pattern, and this really suggests, I think, that these big institutional investors, they're not just making little adjustments here and there.
No, it looks like a concerted effort to reduce their exposure.
Right, they're systematically pulling back. And this isn't happening after some massive price spike where everyone's cashing out.
Exactly, that's what makes it so interesting.
We're talking about Bitcoin hovering around, what, $80,000?
Yeah, give or take.
You'd think that would be considered a win for most people.
You would. But that's not what we're seeing.
No. So this is where the alarm bells start to go off a little bit, right?
Yeah, it's like, okay, there's something else going on here. This isn't just, oh, I made a quick buck, time to take some profits.
Right. This is a different beast. So what are these institutions seeing that's making them so hesitant, even with Bitcoin at these prices?
Well, the persistence of these outflows at this price level, it really does suggest a shift.
A shift in sentiment?
Exactly. It seems like they're more worried about potential downsides than excited about more potential gains in the short term.
Yeah, that's a big change. It's like the fear is starting to outweigh the greed.
Right, the FOMO might be fading a bit.
So then, of course, we have to talk about GBTC,
Good old GBTC.
the gift that keeps on giving. So yesterday saw another $20.60 million flow out of GBTC.
Yeah, it's interesting because that's actually smaller than some of the daily outflows we've seen in the past.
Right, sometimes it was over $36 million in a single day.
Yeah, so maybe things are slowing down a bit there.
Maybe. But even with the slowdown, the total amount of money that has left GBTC since it converted into an ETF is, well, it's kind of hard to wrap your head around.
A lot of zeros.
We're talking about $22.44 billion in total net outflow just from GBTC.
Yeah, that's not just like a little dent. That's a massive exodus.
That's got to be one of the largest sustained outflows from any ETF ever.
Yeah, it's got to be up there. It really highlights how unique the whole GBTC situation is.
Right. It's its own animal. So do you think, is the slowdown in outflows because everyone who wanted out already got out?
It's possible. You know, maybe those who were spooked by the conversion or had short-term goals, they've already moved on.
Makes sense. So the people who are left holding GBTC, are those the diamond hands?
Could be. You know, the true believers, the long-term holders.
Or maybe they're just stuck, right?
Yeah, some might be locked in for various reasons.
But either way, even with these smaller outflows, it still puts pressure on Bitcoin's price, right?
Oh, absolutely, because Grayscale, they have to sell Bitcoin to cover those redemptions.
Right. It's like a constant drip, drip, drip of selling pressure.
And that can definitely weigh on the price, no doubt.
Okay, so now let's get to this ETF net asset ratio.
Okay, yeah. This is where things get a little tricky.
Yeah. It's currently at 5.6%. Now, for people who don't spend their days thinking about ETFs, what does that even mean?
Basically, imagine all the Bitcoin out there in the world, right?
Yeah.
The entire market cap. That 5.6% represents how much of that total value is currently held within these Bitcoin ETFs.
Okay, so like for every $100 worth of Bitcoin, $5.60 is sitting in an ETF.
Exactly. So it gives you a sense of how much influence these ETFs have, right? They're not insignificant.
No, not at all. But here's the thing that's weird. That 5.6% has been pretty stable,
Yeah, that's the head scratcher.
even while Bitcoin's price has been dropping.
Right. We saw Bitcoin fall from over $90,000 down to around $80,000.
And the ratio basically stayed put,
Yep. It's like they're moving in lockstep.
which is a little unsettling, right? Because it suggests maybe the outflows aren't just a reaction to the price dropping.
Yeah, it could be the opposite. What if the outflows are actually driving the price down?
Yeah, it's like the ETFs are a leading indicator. They're signaling that more bearish sentiment is on the horizon.
Exactly. It's like the canaries in the coal mine. They're sensing danger before the miners even see it.
And this is all happening despite the fact that historically there's been a huge amount of money flowing into these Bitcoin spot ETFs.
Oh, yeah. I mean, we're talking about $35.77 billion in cumulative net inflow. That's a massive vote of confidence, at least initially.
Yeah, it was like the floodgates opened when they first got approved. All this pent-up institutional demand finally had a place to go.
Exactly. They're waiting for a regulated, accessible way to get into Bitcoin. And then, boom, ETFs arrived.
So what changed? What happened to all that enthusiasm?
Well, the recent outflows tell a different story, don't they?
Yeah. What was once a rushing river is now a trickling stream,
It seems like those institutions are reevaluating their Bitcoin strategy.
rethinking their whole game plan.
Yeah, and it's not hard to see why. I mean, look at what's happening in the world right now.
Yeah, things are shaky.
Recession fears are on the rise. There's tons of regulatory uncertainty around crypto, and the overall financial markets are just jittery.
Nobody knows what's going to happen next.
Exactly. And in that kind of environment, Bitcoin, with its notorious volatility, starts to look a lot less appealing.
Especially to these big institutions, they're all about managing risk.
Right, they can't afford to gamble.
And that whole idea that we'd see this constant, unstoppable wave of institutional adoption.
Yeah, that narrative's taking a hit right now.
Yeah, it's definitely facing some headwinds. And speaking of headwinds, remember when Bitcoin dipped below $80,000?
Oh, yeah?
That triggered a wave of liquidations,
Right.
like $200 million worth.
Yep. A lot of people got caught on the wrong side of that trade.
And that kind of thing just adds fuel to the fire, doesn't it?
Oh, absolutely. When you have those forced selling events, it can really accelerate a price decline.
It's like a chain reaction. One liquidation triggers another, and
Down we go. And all of this is happening while the economic outlook is getting cloudier by the day.
right, those recession fears, the tariff talk, it's all creating this risk-off sentiment.
People are getting scared. And when people get scared, they tend to sell.
And then you've got these hedge funds closing out their arbitrage trades.
Yeah, that's another factor adding to the downward pressure.
So for those who don't know, how does that work? What's an arbitrage trade?
So basically, imagine a hedge fund sees Bitcoin trading for slightly different prices on different exchanges.
So they buy low on one and sell high on the other.
Exactly. They try to exploit those tiny price differences to make a small profit.
Sounds risky.
It can be. It requires sophisticated algorithms and super fast trading systems.
Because if that price difference disappears...
Yeah, then the trade goes sour. And when the market gets volatile, like it is now, those arbitrage opportunities dry up,
So the hedge funds have to close out their positions.
which often means selling Bitcoin.
And that selling just adds to the downward pressure we're already seeing.
It's like a vicious cycle. The macroeconomic fears drive the price down, which triggers liquidations and arbitrage unwinding, which pushes the price down further.
And around we go.
It can be tough to break out of that cycle.
All right, so let's take a step back and just recap all the key numbers we've been throwing around.
Yeah, let's make sure we're all on the same page.
So we've got 6 straight days of negative net flows from Bitcoin spot ETFs. That's a big red flag right there.
Yeah, that's a sustained selling trend we can't ignore.
And the daily outflows are significant. Yesterday alone, we saw negative $369.42 million leave those funds.
Not just a blip on the radar.
No. And then we have GBTC, still bleeding money with a total historical net outflow of negative $22.44 billion.
The GBTC saga continues.
It does.
Yeah.
And the total net asset value of all these Bitcoin ETFs is down to $88.14 billion.
That's a clear sign of diminishing institutional interest.
Right, they're pulling back. And then we have the ETF net asset ratio sitting at 5.6%.
Which, on the surface, looks stable.
But as we've discussed, that stability is actually quite concerning.
Yeah, it's stable but declining, suggesting a proportional sell-off alongside Bitcoin's price drop.
And it could be a signal that further declines are coming.
Right, those outflows might be a leading indicator of more bearish sentiment.
And all of this is happening despite the fact that historically, these ETFs have seen a huge cumulative net inflow of $35.77 billion.
Right, so much initial excitement.
But the momentum has clearly shifted.
The sentiment has changed.
And we're now seeing a very different picture emerging.
A picture that might not be so rosy for Bitcoin.
So, given all of this, what does it mean for Bitcoin's price?
Well, right now, Bitcoin's sitting at around $80,338, down 2.43% on the day.
It's at a critical point, technically speaking.
Yeah, any further drops could trigger even more outflows from those ETFs.
That's like a tipping point.
And what's really concerning is that even after a pretty significant correction, institutions aren't buying the dip.
Yeah, they're staying on the sidelines,
They're not seeing these prices as a bargain.
which is a big shift from what we were seeing before.
Yeah, the fear is real.
So big picture, what's your takeaway from all of this?
The main message here is that these persistent, large outflows from Bitcoin spot ETFs are a serious warning sign
A warning sign, that way.
that institutional investors are increasingly worried about Bitcoin's future.
They're voting with their feet, so to speak.
Exactly. They're pulling their money out. And the fact that this is happening over multiple days with such large sums, it's not just a random blip.
No, it's a trend.
It suggests this market correction might have further to go.
More pain ahead.
It's definitely possible.
And with all the economic uncertainty out there, it's hard to see a clear path to a quick recovery.
Yeah, the macroeconomic backdrop is not helping.
Recession fears, rising interest rates, geopolitical risks,
It's a lot for investors to digest.
and Bitcoin being a risk-on asset, it's going to feel the pressure.
Absolutely. When the tide goes out, the risky assets get hit the hardest.
So for everyone listening, taking all of this into account, what do you think?
Yeah, what does this mean for you?
How do you see this playing out for Bitcoin in the coming months?
It's a question worth pondering. We've laid out the facts. Now it's up to you to draw your own conclusions.
Thanks for joining us on the deep dive. We'll see you next time.
See you then.